That's a great question. So here's the challenge. So being an executive with the banks, I've been with the big banks, Bank of America, Wells Fargo, and Citibank. So if you take my 38-year career, about 2.5 decades were with the big banks as an executive. The problem is this with the big banks is that when you work for a bank, so if I were to turn around and hang my NMLS license, which by the way, I'm not licensed under NMLS with the banks, you're under FDIC, but you still have a unique identifying number, different from a mortgage banker or broker, which has to have their NMLS license.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Hey folks, welcome back to the show. Today's guest, Alan Mack, is the founder of Mack Financial Services. He has 30 years in the mortgage space and has guided clients through over $1 billion in closings. He specializes in high net worth borrowers and provides a client-centric solution to transform home financing into reality. He's been mentioned in both Forbes and Fortune magazines, and you can find him at mackfs.com. Alan, thank you so much for taking the time today.
Dylan, it's so nice to be here. Thanks for having me.
When we talk specifically about mortgage, I think there's so many people right now, especially younger people, who are looking at all the new construction that's going on and are also looking at some level of uncertainty of where things are going to go. And they're saying, hey, what's the tools at my disposal? Is now the best time to buy? And then also, who do I go to? I'd like to start there and ask you, based on all your experience, what's the first step that folks should take if they may be that newer homeowner?
So when you look at the first-time home buyer, and my specialty is the luxury market, right? But we'll talk about a first-time home buyer here, which typically isn't the luxury market. But a first-time home buyer, they definitely want to get pre-approved from an investor or a lender, whether it's a bank, they've got local to them, a credit union, or a mortgage banker or broker. Because when they make that offer, they want to make sure that they're going to be approved to buy that home. So that's the first step. Make sure your credit's good. Keep your credit clean. Try not to, have too much credit card debt, because that will definitely hurt your FICO score, and they're going to use that when they qualify you in the debt to income ratio. So I really have to pay attention to that. So really, it's important to get pre-approved ahead of time. The rates are going to come down this year. The administration is working really hard with the Federal Reserve to get those rates down, and they will come down this year. We're seeing some headway that way. So it's going to be, I think, a really busy year this year, one for purchase business and also for refinance business for those that got rates maybe 6, 7, 8%.
You mentioned that your niche is in those high net worth individuals. How did you get into that space, right?
That's a great question. So, I've been doing this for it's coming on 38 years. So I got a mortgage in 1988, and back in my early days, worked for Bank of America, and then moved on to Wells and some other big companies throughout my career. But in 2022, rates were running about, let's say January 22, they were running about 3%, we'll say. So it was great for people looking to buy a home. Rates were low. And all of a sudden in March 2022, the market took a shift. And rates went from 3% to 5% to 6% to 7%, 8.25%. I just killed the market. And so anyone that was, doing loans, and I don't care what company you work for, anyone in the United States, if you're a mortgage banker or a broker, you felt that pain as that client or that potential buyer felt that pain if they were going to buy a property with those high interest rates.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
So the market literally came to a standstill. And, I've always been busy, and I left Bank of America in March 2020, formed my own corporation back in 2020. And I was doing loans through 20 and 21 and then 22. And when the market literally collapsed, I had to think of something different outside the box. And, because of my experience in the luxury market, especially, I live here in Southern Orange County here in California, median home price about 1.2, 1.3 million median home price. So I live in the land of luxury, we'll call it. And so I get calls and, for help. And what I realized is that there are a lot of luxury clients out there that really need help in structuring, figuring out what they can afford to buy, along with the fact is which is the right bank for their particular needs. So I created this, I'll call it a paradigm shift, and really changed my whole platform and with my firm. So really it's an advisory firm for the affluent clientele in the luxury market. That's what I focus on. It's been my experience. Launched it in 2023. And since 2023, I've closed over 150 million in closed contracts. Since then, I have some amazing stories. I work with very famous people, sport figures, captains of industry. They come to me for help when they're looking to purchase a property, whether it's a primary, second home investment, anywhere in the United States. My banks are nationwide. But what I did is I created this kind of a niche or a concierge service as a financing advisor for that type of client.
Now, when we're talking about these types of deals, I mean, this is, for me, I'm a fish out of water in this space. But, it's interesting because you think, well, okay, these are high net worth individuals. Of course, everything is going to be a seamless process. But there's, fewer people that they can go to. They have to have subject matter, expertise in this area of higher dollar homes. And then also, the process for sourcing those loans as well. You've got to have those relationships. What are some of the bottlenecks that folks like this run into when they are trying to get, a mortgage of that size?
That's a great question. So here's the challenge. So being an executive with the banks, I've been with the big banks, Bank of America, Wells Fargo, and Citibank. So if you take my 38-year career, about 2.5 decades were with the big banks as an executive. The problem is this with the big banks is that when you work for a bank, so if I were to turn around and hang my NMLS license, which by the way, I'm not licensed under NMLS with the banks, you're under FDIC, but you still have a unique identifying number, different from a mortgage banker or broker, which has to have their NMLS license in that particular state. What I found was in the banks is this. After 2008, when the mortgage meltdown happened, and it was, remember that, it was just everyone was panicking and so forth, Wall Street stopped buying jumbo loans. Now, what a jumbo loan is for your viewers, it's anything over the conforming limit. So I think today it's around $860,000, call it $1 million and above, making it real simple. Those loans used to be sold on Wall Street before 2008. So they would package them and they underwrote to Wall Street. Very much today, as you have Fannie Mae, Freddie Mac in the conforming space, that underwrites. And it doesn't matter who the bank is or who the investor is or the mortgage bank or broker, it doesn't matter. They all sell this to Fannie or Freddie. And so they underwrite to those guidelines. The problem is when the banks weren't able to sell their closed loans to Wall Street, they had a portfolio of those loans. So those loans are kept on the books. So every bank has unique guidelines, unique qualifications, unique reserve requirements. I can go on and on and on. So what I did is I created a network of banks and bankers in those banks because I was an executive myself. It's kind of like we all know each other. So I knew who the top guy is at B of A, Wells, Chase, PNC, name the bank. I knew who the top of the house is. It's kind of like that inner circle. I mean, I have almost 4 decades in this industry. So, and I've been a top producer. Just kind of know each other. And so I've learned the guidelines with each one of these banks, know what their niches are. And I'm able to take that experience that I have and take that to the client, say, let's look at your overall portfolio. So I look at their real estate they own.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency. It's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
I look at their assets they have, whether it's liquid or non-liquid. I check and look at their credit situation, and then I look at their income. Basically, how they're deriving their income. Usually it's a C Corp, S Corp, or LLC. 95% of my clients in the affluent market are self-employed. And taking all those and kind of package it all together and saying, okay, based on the home they're purchasing and what kind of home they're purchasing, what their goals are. Do they want to have a higher loan to value, meaning put less money down? They want to have a lower payment. They want to go interest only, whatever the case may be. I know the bank to take them to, because it's so finite and detailed. When you get into that affluent client, everything can change. I mean, literally, if I change just one little item, it's not the right bank. It's a different bank, and it can change daily. So it's so unique in the banking world that their guidelines can literally change daily. Their pricing can change daily, multiple times during the day. So I have my finger on the pulse with these banks. I talk to these guys all the time. I do a lot of business with these banks. I bring them in, great relationships with these clients that I bring to the table for these banks. So they literally roll out the red carpet for myself and my client that I work for. So my firm is hired by that client as an advisor, and then I know where to go. And I got a structure put together, and I take them to the right bank. And I'll tell you, I have so many stories I can tell you, Dylan. I mean, many, many, many stories. So, just this month alone, we are able to get a client a 5% rate. He was buying a property, 3.9 million at Marina Del Rey, wanted to put as little down as possible, was trying to put 20% down, which can be difficult. Anything over, say, 2 million or 3 million loan amount, the banks kind of fall off then. And I was able to get him a loan with less money down. We couldn't go 80% because one of the banks was requiring a $1 million relationship. So we'd have to move $1 million of his money to that bank in order to get an 80% loan, over, 3 million. And he didn't have it. Unfortunately, we couldn't do that. So I had to get creative here. So what I found is I had one of my other banks, and came to realize that, his mother that he managed an account for through a trust has a relationship at this particular bank. So I was able to have my banker utilize that relationship that was his mother's account, not his account. And we got him a rate of 5%. Literally got a 0.5% off the interest rate on a $3 million loan. Now, if you do the math on that, it saved them $927 per month in a payment. Plus, he was able to put less money down, which equated to that money that he didn't have to put in those four walls. You can invest it, say, in a CD or money market around, call it 5% rate. It was another $250 a month in income. Basically, it came up to be like $1,150 around there dollars a month in savings. Had he gone to his own bank, he would have paid a lot more. And by the way, had he gone to his own bank, we had some issues behind the scenes with title. It was a cloud on title.
Yeah.
And my banker coincidentally had done a loan in the same neighborhood. It was on the coast, and it had a coastal commission that put some sort of lien on the property and all the properties there. We were able to work with title, have it removed. We were able to close that loan. So had it not been for my banker and the bank I took him to, there's a high probability this loan never would have closed. That's just one story. I have many, many, many stories.
I'm
And
familiar
so,
with a clouded title from working with distressed sellers. It's interesting because you got bigger problems, but there's some similarities. For folks who are looking at these luxury homes, does the price point of the home have an even greater impact once you start to get over that like $2 million mark? Is every $100,000 is it like, hey, now we need to be looking at a different bank or a different person to be talking to?
That's a great question. So most banks can do loans up to 2 million. So they remember, because they're writing the check, it's coming out of their books, right? They're writing that check for that. They can do a $2 million loan, but after 2 million, they start dropping off, and then their guidelines change. So it may be where you have a bank that goes 80% loan to value on a 3 million. So it'll be a $2.4 million loan. For instance, you may have another bank only goes 70% loan to value. The problem is the client doesn't know this. And once they start the process, usually they're going to get referred by the real estate agent that they work with. We'll say, oh, call my loan officer at Wells Fargo, right? Or whatever, whoever the bank may be. And I'll tell you, and I'm not joking when I say this, the probability is very high that it's the wrong bank.
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
And many reasons. One, rate may be too high, guidelines are too tight. So they're not really looking out for the best interest of their client in reality. That's when I opened up this concierge service. Again, no one's going to beat me. I mean, I could take a bank and you get the best pricing and I'll find a bank that will beat that bank. I'll be honest. I mean, it's like, so a client is going to walk into their local bank. And by the way, 75% of the business that's done in the mortgage industry, in the banking world, are done through Bank of America, Wells Fargo, and Chase. They're the three biggest, right? The big box banks. But they cater to the masses. They don't really cater to that affluent client. I'm being just straight with your audience. Is that, some banks, like I have one of my banks, they call them lender to the stars. I mean, they do a lot of Hollywood, whether it's director, producers, actors, A-list, and so forth. It's probably one of the best banks, and that's where I take a lot of my high-end clients to, where I even negotiate some crazy stuff. I got one right now, got this week. It's a $25 to $30 million property in Bel Air. It's an investment property, bringing about $136,000 a month in income. And you got to get creative on it, on the purchase. But long story short of this whole thing, we're going to do a $15.5 million investment loan on this property, where most lenders won't touch an investment loan. First of all, because they don't like it. They like primary or second home. They fall off really fast when you go into investment. And a lot of the banks only max out $1 million. Like, for instance, I'll give you a U.S. bank as an example. Their max loan amount on investment, with an exception, maybe go 2 million, but it's around $1 million. I mean, they, with most of these banks, again, they don't like investment property. So taking that situation, this particular client, I knew which bank to take him to, and we're going to build a relationship. And the funny thing was, this particular individual, his company's worth about $60 million. And it drives a lot of volume and so forth. And so they were looking at leaving Wells Fargo. They kind of outgrown them, which you typically do when you start making a lot more money. And I got them set up with this bank behind the scenes. I got the whole team coming together for this particular client. Never mind helping them with the financing on buying this property, but taking care of their relationship for their business, personal, or everything else you can include. So literally the bank rolls out the carpet for you. And that's what I created, this concierge service. And I'm telling you, it's unbelievable. Never thought it would just take off like it did.
For these banks that are, you mentioned, the lender to the stars, of course they have to hedge their risk. What type of foreclosure rate, or default rate would you see in this ultra high net worth space? Because of course, things can happen to anybody, right? So what's their level of risk tolerance when you're dealing with that pool?
That's a good question again, too. It's very, very low. Typically you find, because remember, you're dealing with a high-end client, right? First of all, who's got, they've got reserves. Now, don't get me wrong. I have one client I was helping, a young guy, I won't mention his name, it's so very famous, but in his 30s, and billionaire, and lost, I'm going to say everything, but he became not a multimillionaire, he became a millionaire, from a billionaire. So had some travesty, had a house burned down in Palos Verdes, with the fires. Had $100 million home and lost it, and they had minimal insurance on it. So, not Palos Verdes, I take that back. Palisades. Yeah, I said Palos Verdes, the Palisades. And the unfortunate side is that, things can happen, but the foreclosure rate on the luxury market is very, very low because, again, they have equity. They'll have anywhere between 20, 30, 40% equity in that property. There's no problem on turning that property and getting it sold. They have a plenty of equity there. Now, mind you, if it was a first-time home buyer, they come in with 3% down, 5% down. You're going to have a higher foreclosure rate, we'll call it, because there's less money down from that particular consumer that's buying that property.
And in the game. Yeah, I mean, you mentioned something about investment properties, and I want to touch on that. So, are there folks that are using these high end properties, not as a residence for themselves, but as an investment property? And what would be the use case for that? Would that be like some type of rental?
When they buy investment property, a lot of times they'll do it. They'll put in an LLC, which some of my banks allow LLC. They put an LLC. They run it like a business. So if you think of it this way, it's kind of like investing in a business, right? So if I were to put money in a business, buying a business for $2 million, I put my money down for the down payment. I get it financed, right? You have income coming in, same type of thing. So when you look in the luxury market, these rents, they're pretty steep. Like I said, I got one right now working on 136,000 a month for rent. And so, they look at it as a business in that end, different from when you look at the conforming world on an investment.
Right, right.
Your margins are much smaller and tighter because of the rent you're getting, right? But in the luxury market, I'm telling you, it's just it's unbelievable. But there's an opportunity, like I said, for investors that want to buy an investment property. What I always recommend is put it in an LLC and run it like a business.
Now, for these folks who are renting out these super luxe homes, are these themselves folks typically with a real estate background, or are they folks who may like the area and see it as a potential a new business for them to get into?
I have both. So I have some that they have their not so much a broker, they're just very experienced in purchasing properties, and whether it's a flip or they purchase to keep. So they're really experienced, but I wouldn't say that there's any type of challenge or issue there with them on buying an investment property. It's just making sure that they get the right bank when they buy that investment property. Because I'm telling you, they'll never know until they start that process
Yeah.
and they're into it and go, "Oh, sorry, yeah, you don't qualify." And when you tell someone that is affluent that they can't qualify, I'm gonna tell you what, because I get them on the back end after some bank will turn them down. They call me and they get my name and number, and they'll tell me, they said, they're so upset. Like, how could they say no? I could pay cash for this house. I know you can, but you got to qualify, and they
Yeah, I
have
mean,
stricter
it's
guidelines.
almost like we don't qualify is what the bank should be saying. Hey, we don't have the
Yes.
to get this done. It's not, but it's interesting because again, to draw the parallels again, totally different area. I worked with and still work with many folks who are first time buyers, and you bring them to the wrong lender, and they'll say, "Oh yeah, you're not qualified." When in actuality, they don't have the manpower or they don't have the desire to be helping folks in that segment. And of course, where I'm licensed in Texas, there's all types of programs for those people. Not to mention all the incentives that builders have. So it's exactly right. Like you could be thinking, hey, I'm going to go to such and such bank because this is what I've been banking with this whole time personally, only to find out like, hey, I just wasted, a month, 2 months of my time when I was talking to the completely wrong person.
And again, going back, being an executive with the banks hire most of them hire very inexperienced loan officers. They'll get them out of college. They'll get them from maybe they were selling cars. They were doing something else, and they want to get into finance, right? So they go to work for a bank. The bank pays them a salary. They give them a little bonus override, but most of them are very, very inexperienced. They're depending on an underwriter to make a decision for them. They're depending on a process to tell them what to get. In the world of luxury, my clients are very, very, very complicated. They all are. Trust me, they all are. I've had a client with a 5,000-page tax return. And by the way, one of the banks, I won't mention the big box bank, but they were mentioned before, one of them turned this client down because they said he couldn't qualify. And when I say they were livid, they were livid. They were worth, I think it was over 50 million at least with their company. They got turned down. They were buying a $13.3 million property, second home down here in Southern Orange County.
Yeah.
And he came to me and my banker, who was probably the number one in the nation, he funds about 30 to 50 million a month in business. He's unbelievable. One of my best banks. And he was able to find income on page, I think it was 480. 480 found like $2.5 million in income. Problem was the other bank, and I'm not knocking underwriters because again, I was a banker. I worked with these underwriters. I had underwriting experience, by the way, on top of that to boot. Um, it's like many of them are very, very inexperienced. I'm gonna tell you right now, and they depend on a senior underwriter or someone at the top level to make that decision. But when you work in this market I work in, the underwriters have to be very, very, very experienced. If you do a $2 million loan, you can have pretty much any underwriter to do that, right? When you get like a 5 million or 10 million or $20 million home loan, you have to have someone with so much experience, because we're looking at other things besides the things you think of in the conforming world, right? The
Right, right.
W-2s, pay stubs, bank statements, you kind of fit the credit. In the world where I'm in, I can use cash flow analysis, asset depletion. Like, for instance, I had a client that had sold his company, 70 years old, had $28 million payout on his company, starts a new company. They're moving forward to do an IPO. He's 8 months into it. Of course, you can't use that income, as you know, because he's new on his new company. And he was buying a $7.1 million home in Balboa, right by Newport. And the problem is that he was going to have to pay cash. And he had all his money invested in stock, and it was making money. And he came to me and he says, Alan, I need your help. He got referred to me, and he said, I want to put down as little as possible. Otherwise, I have to liquidate that stock. I got to pay capital gains on that stock. And I can take that asset that I'm making money on and stick it in those four walls. Doesn't make any money anymore. Please help me. It's no problem. So hook him up with my bank. Banker starts the process, calls me up and said, we got a problem. I go, what's wrong? He goes, he's got a 681 FICO. I said, what? Now, in the world of jumbo again, or luxury, typically banks want to see a minimum of 700 FICO score. And if you get a higher end stuff, 720 FICO score. And so I do have banks that will go down to 680 FICO score. That's the lowest. That's the lowest threshold for the banking world in the luxury market. And they did an exception in this case. So we were able to get creative. So it took him from going as an 80% loan, which we're going to do an exception on. He thought his FICO was 780, not 680. So instead of putting 20% down, he's got to put 35% down now. That's an extra $1,050,000
Right.
they would have to come up with, right, to close the escrow. And so he's begging, Alan, please, can you come up with something? And what it was, he had a rolling credit card, had no clue about identity theft a while back. There was a credit card that no one caught, and it was rolling late every single month. That's why his FICO was so low. So what we did is we got very creative. We did a first loan to value for that property at 65%. And we want to make up any way we could the difference without him liquidating stock and coming up with more money for the down payment. So what we did is we moved some of that money over. So we took some of that stock he had invested. He filled out what's called an ACAT form. Fills out that ACAT form. He's able to change the custodian of part of the stocks he's got, moves over to the new bank as the new custodian. We had to move over $3 million. We got a line of credit against it at 5.75% interest only, no fees. Against the $3 million, got an extra $1.5 million. He came in with 14% down to close that escrow. 14% down with a 681 FICO score. And remember, his goal was put as little down as possible. So never mind, did I meet his goal? I exceeded the goal. So I have I have so many stories. It's unbelievable.
Yeah.
Again, I've closed over 150 million so far. Got a lot of stories to tell, but it makes me feel good because, again, it's kind of like when something comes my way, complicated, I put on my hat and I go, okay, I start figuring it all out. And once I sit down with that client and figure out, okay, let's go over your real estate you own. Let's go over the assets you own, credit, income, so forth. And here's the thing. I have banks that look at assets differently. And so in one of my banks, what we can do is we can convert that asset into actual income, not giving them interest income, we'll call it, where let's say they have $1 million at 5%, they're going to get 50,000 in income. No, we're talking, I can convert that into 30,000 a month in income because they look at it differently. So it's like it's basically an asset depletion. We do cash flow analysis. So there's a lot of different ways they can get creative to get someone into a property where if they were going the standard, walk in the bank, talk to the loan officer, they're going to go the route as everybody else, and they're most likely going to get declined, or they're going to hit some headway, put it that way.
We are coming up on time here, Alan. Where can folks go if they may be looking at ultra luxe homes in Southern California? How can folks reach out to you and your team?
So they can reach out anytime. So I'm available, and again, my email address is alan@mackfs.com. That's alan@mackfs.com. Email me anytime. Call me. You'll find in most cases I pick up my phone probably 9 times out of 10. I built my whole career on service. My phone number is 949-929-1091. And again, I'm here to help. If you got any questions, I'm a free phone call. And if I can help you in any way, I'm going to do my best.
Thank you for taking the time today. Thanks for coming on the show.
Dylan, thanks for having me on the show.
Thanks for joining us for today's Real Estate Pros Show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing for your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. If you're interested in joining us as a guest of this show, please visit investorfuel.com/pros to apply. You can also check the show notes for access to free resources, how to get access to world-class lead generation, and much more. Don't forget to subscribe so you never miss another episode. Have a great day. We'll see you on the next show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.